Hello, everyone. Good morning, Trade Pros. Good morning, YouTube. Good morning, everyone. We have yet another inflation report today that we want to talk about. We got a few different things to talk about in the market today. It is Wednesday. It is midweek after yesterday's impeccable bloodbath off the CPI data that came out. Right, we had a very strong move off it pre-market. And that continued throughout the day, especially into the end of the day. We had a very strong slip into the end of the day. And today was another report, the PPI. So CPI yesterday is consumer based, based on the consumer spending from their actual individual accounts, and then the PPI is based on consumer spending, but from other factors. So the PPI data came out this morning. Let me just read some of these numbers for you. Welcome everyone. Hello. We got Sharif, we got AD, we got technical analysis, uh, and Mary. I hope everyone's doing well. Um, and some of this PPI data that came out, the PPI year over year, we had 8.7 versus the 8.8 expected. So that number slightly lower than the expectation. Remember last time around, I think it was the expected number was around 10 and it came out at 9.8. The core number, however, year over year, 7.3 versus 7%, which is slightly higher than the expectations. And then the month over month, we had 0.4% versus 0.3% expected. So that is a slight increase as well from the core month over month, I should say. So the PPI data kind of mixed, right? The core numbers suggest that inflation has risen month over month, right? And we have not yet subdued that figure in itself, but it is a drastic drop from the prior months, right? The expectations were slightly higher. However, based on the prior months, we have turned down a little in comparison to CPI, where CPI had been a larger than expected number. So we got a little mixed bag of nuts right there. The market is up slightly, barely off of some of that news, right off a key support level. We'll talk about those areas on the technical perspective on the futures when we kind of talk a little bit more about the news that came out. But yesterday, right? Yesterday and today, we can talk about some of this stuff. The Dow Jones was down nearly 1,300 points, right? This is the largest market decline since the steep pandemic driven volatility that we saw in 2020. So this is the worst day. Yesterday was the worst day. We had the Dow Jones was down 14%. Uh, in 2022, right? Overall, it's been down a very decent bit. The S&P was down about 4.2% or 4.3%. The Nasdaq, the tech heavy Nasdaq, was down 5.2%. And year to date, right? S&P is down 17%, while the Nasdaq is down about 26%. And this broad sell-off accelerated into the afternoon, especially into the latter portion of the day, in some force attributed to the outsized options activity, pulling every asset class deep into negative territory, from stocks to oil to gold to commodities to crypto, all of that stuff. So we talked about the inflation report yesterday, so we don't really have to go over it too much. We saw that the CPI rose 8.3% year over year in August compared to the 8.1 consensus forecast. And while the core CPI, which strips out volatile food and energy prices, which I don't think it should, but rose more than the expected. The expected was 5.9%. We saw 6.3% from that core number. That is also despite gas prices having come down tremendously over the past 3 to 4 months or so, suggesting that the price pressures are seeping into more parts of the economy, such as housing, tuition, medical services, food, right? Stuff like that. And the inflation report is one of the last Fed reports that we are going to see before next meeting. Which is next week. The PPI is the last inflation report that we saw today. And there have been a lot of worrisome, I would say, attributes based on this inflation reading, right? What I'm going to do is we look at this every day pretty much because it's going to be important. We're going to be looking at the expectations for rate hikes. And yesterday, after the report, we had a 80% chance of a 75 base point hike and only 20% chance of a 100 base point hike. Now that has changed. As of this morning, right, we have now a 32% chance of a 100 basis point hike coming out next week, right, with a 68% chance of a 75 basis point hike. So it is very, very, it's a very drastic change, if you will. And that's why we've titled this recession pretty much knocking on the doorstep, right? So there were talks about a softer landing prior to this inflation data. Now that seems to be out the window, and a soft landing leading into a recession is more and more, um, or sorry, a soft landing is off the table while leading into a recession is more and more uh, expected, if you will. So while the probability has changed aggressively from the 75 to 100 basis point hike, a full-fledged recession could be around the corner with these rapidly rising borrowing costs, right? We still have QT that's going to aggressively pull money supply off the table. We still have aggressive rate hikes as well. So there was a response from the White House. Today's data show more progress in bringing global inflation down in the U.S. economy. So Biden wrote, overall, the prices have been essentially flat in the country over the last 2 months. Gas prices are down on average $1.30 a gallon since the beginning of the summer. And this month we saw some price increases slow from month before at the grocery stores, and real wages went up again for the second month in a row, giving hardworking families a little breathing room. And it will take more time to resolve and bring down inflation, which is why we passed the Inflation Reduction Act to lower the cost of healthcare, prescription drugs, and energy. So it's one thing to say this, but it's another thing to look at the data and not necessarily agree with this. The PPI was a little more on that side of things, but still the CPI number, and what you look at internally based on the actual factors of the CPI, is not necessarily um, agreeing with that statement, if you will. So we've seen like food and shelter prices continuously kind of hold an increase, but overall, the inflation target from the Fed at 2% is a very, very far reality. So far that they're considering, right, a third of a chance that we're going to see a 100 basis point hike come out in September, which is next week today. So that's a report that we're going to trade for sure. But we also have something else contributing to some of this inflationary talk and the supply chain issues. We talked about this a little earlier this week. Railroads, right? Working on the railroad. And as mentioned, I think it was on Monday, right? I think that was the main topic of conversation. There's another inflation threat that is in the works: Western style shutdown threatening the U.S. economy. A duel between 60,000 railroad workers, their unions, and some of the largest U.S. railroad operators is already having some impacts, but the worst is yet to come. At 12:01 a.m. on Friday, deadline to agree to new terms hangs in the balance, with gunslinging likely to cost the nation about $2 billion in economic output per day if things go off the rails, pun intended. So that we talked about that $2 billion, and right, it could have a massive effect on this. So what's at stake here? There are already reports of railways stopping to take grain and animal feed shipments, while most of them had already put a halt to ammonia fertilizer and hazardous items to ensure that sensitive cargo is not left unsecure. Other raw materials, other raw deliverables, right, are also facing uncertainty, like coal transports that could be interrupted ahead of the pre-winter stocking, which could also subsequently trigger an increase in gas power demand. By some estimates, the railroads in the U.S. impact about a third to about 45% of the freight in the U.S., meaning that could be knock-off effects in many industries. So this is, in essence, another supply chain threat, right? Other than the pandemic, the current dispute goes back 3 years and mainly centers around pay hikes, sick leave, and time off policies. So in July, the Biden administration intervened to avert a strike, naming a panel of arbiters to mediate the contract dispute, but two remain holdouts. So the Brotherhood of Locomotive Engineers and the trainmen and the International Association of Sheet Metal, Air, Rail, and Transportation Workers account for over half of the rail force. So the Biden administration is now speaking with truckers and air freight companies to assess alternative modes of transport. But if things get real bad, Congress may be forced to impose contractual terms or send the dispute forced arbitration. So emergency powers could also be used by the White House to deliver certain critical materials. But if this goes awry, right, the supply chain issues will have that effect on inflation as well. So that's going to be the main focus throughout the week, seeing how this railway dispute kind of ends on Friday, which could cause a lot of those supply chain issues. Now that we have the inflation data out of the way, we understand what is going on until the Fed meeting, which is going to be huge next week. And then after, we have more data to look forward to, right? Like, for example, the September inflation and so on and so forth. So right now, as it stands, if we take a look at what's going on in the overall market, we did pop a little off of that key support level. There are a few areas that I do want to mention. Yesterday, we had a few areas that we were mentioning. Remember the 40-42 area, right? That was a huge pivotal turning point. We failed to break above it with a real bid multiple times, and that was the peak pretty much of the day session before we had a massive slump, especially into the close of the session. So today, what's going on is that we're holding a key support structure area in and around 39.42 to 45. That's a huge area, massive support zone, and prices are tapping on the resistance, another huge resistance point, 39.65, right? 63 to 66 is the 3-point area where it is the bottom end of a very key distribution block. So that is going to be a massive resistance to hold out. Now, should price accept above that and we get a nice bid, a strong volume press above about 39.65-66, we are going to be entering into a new distribution block, which will take us to the 75s, which will take us towards that 39.96 and eventually the 4,000 again, that 4,000 region. So that is what will have to happen for price to actually accept and really push to the upside. We do need to break above that 39.65-66 area with a strong bid. That's going to be a huge pivot. That's going to be a huge resistance for price. And should price accept at some point today under 39.36-37 area, we are going to accept into a new distribution block to the downside, which does have the possibility to take us into 3883, 3885 into the end of the week. Now, I am leaning a slight bit more to the bull side today, especially if we can get acceptance above that distribution block, 39.65-66. I'm leaning a little more towards that because the PPI number wasn't as drastic as a lot of people expected, right? It wasn't horrendous. And the fact that based on last month's data for the July data, we've actually dropped fairly significantly in August, even though the core expected number was smaller than what we actually received. There's still some kind of expectation that a lot of things are at their key supports, and we could see a little buying coming in on the session. So remember, it's going to be pivotal to see what happens at that 65-66 area, right? That's going to be a huge level. I'm not just going to buy every single dip in anticipation that we do break above that area. It's going to be timely and it's going to be calculated accordingly. But those are the areas that we do have to watch with a slight lean to the bull side as we come into a less volatile morning than what we saw yesterday. So I hope you guys enjoyed that update. I hope everyone has a better understanding of what the hell's going on with this inflation data along with the Fed. And thank you all for joining us, right? I hope everyone has an amazing day, amazing trading day. And we'll do this again tomorrow. Remember, check us out at community.tradeproacademy.com, where we have our open free community on Discord. And we'll open up these trading rooms. Thank you all. Chat soon, and I'll see you guys tomorrow, and we'll wrap up the week on Friday. Take care.